Right, we're down the way. Sorry. Thank you, everybody, for joining us this afternoon for this webinar. It's good evening, actually, here from Singapore, and probably good morning to those of you joining from Europe. I think we all realise that COVID-19 has had a huge impact on economies around the world and has hit some sectors especially hard. We are very pleased today to have with us Dr. Philip Vakkerbach from Strategy & which is PwC's strategy consulting group, who has been doing a raft of work around what COVID-19 recoveries may look like and what the shape of that curve may be. And he'll be giving us an overview and then a deeper dive into some sectors as well. And then we'll have a panel discussion, which will be moderated by Ruud Sommerhalder, who is the Asia Insurance Lead for PwC, based out of Hong Kong. And he'll be joined on a panel by Martin Hayes, who is the president for Bosch in Southeast Asia, where he's been since 2011, and is also my vice chairman here at the EU-ASEAN Business Council. Joining Martin on the panel is Johan de Villiers, who is the managing director for ABB for Singapore and the head of industrial automation for them in Southeast Asia. Johan is also a member of Singapore government's Future Economy Council on the Manufacturing Subcommittee, and he also serves on my board as well. And then lastly, we'll have Jens Rubert, who is the regional head for Asia Pacific for Landesbank Baden-Württemberg. I hope I pronounced that correctly. Jens has a long, distinguished career in banking in various posts throughout Asia, and he is also currently the president of the Singapore German Chamber of Commerce and Industry here. So I think with that, I will hand over the reins to Ruud and then to Philip as well. Thank you.
Yes. Well, thank you so much, Chris. Welcome everybody to this EU-ASEAN Business Council webinar, which is entitled COVID-19 Economic Recovery Scenarios for ASEAN. Is it going to be an L? Is it going to be a U, a W, or a V shape? I want to thank you, Chris, up front, and Don Kennock for giving us at PwC the opportunity to have this important dialogue with you around the economic impact of COVID-19 in ASEAN for European companies in particular. Now, Philip has been leading the development of a global consistent methodology to track the market consensus macroeconomic projections dependent on COVID-19 since mid-February. So today we will discuss what this means for European businesses who have operations in the ASEAN countries. And Philip will kick off the discussion, which then will be followed by a panel discussion. And please, if you have any questions, observations, or remarks, use the chat function, and we'll hope to be able to address all of the questions. Now, in addition to analyzing the economic impact of the pandemic, Philip will share which industries are and will be hit hard by the pandemic and which industries will emerge strongly from this global crisis, with a focus on the ASEAN region. We'll take a deeper look at the automotive and financial services industry, because the crisis, as we speak, is traveling from impacting the real economy to the financial services industry. So Philip, may I invite you to kick off the dialogue, please?
Perfect. Yeah, thank you very much, Ruud, for the introduction. I initially hijacked your dial-in, that's why I was also called Ruud Sommerhalder in this, but gladly somebody corrected it, so you now see my real name. Good. I think we have a short presentation to facilitate the discussion. Is it you, Ruud, sharing this, or who's putting the presentation?
That's a good question. Can you share, or?
I think Chris is sharing.
Chris is sharing. Okay. Sorry for the hiccup.
Good. Okay. Yeah. Let's jump straight into the content in order to prepare for the discussion with our distinguished panelists afterwards. So when we maybe move to the first page, what we did and how we approached this methodologically. I think it was very clear for us in Europe around mid of February, towards end of February, that the entire COVID topic is becoming something global, and B, becoming something very serious. And we set up our infrastructure, and the first thing was to decide, okay, what are the real scenarios you need to look at, given that no one has really gone through such a pandemic before. The first thing we did was to say, okay, this is something where we can't really use our historic experiences, so we need to set up a more forward-looking approach. We will also not just look at our own economists, but we go for a market consensus view. We have to understand really what is happening on the healthcare and the epidemiological side to translate this into impact for the real economy. And then we designed our scenario shapes at the end for reason of don't making it too complex. We stick to V, U, and L shape scenarios. We don't have a W shape, but I come to that in a second. We have an underlying database of more than 40 million companies globally in 84 markets with a decent time history where we can build our simulations upon. And as Ruud said before, it's very important to look at this on an industry by industry basis. We split the economy, the real economy, into 16 different sectors, and then calculated our impact assessment. What does it mean for the individual industry sectors? How quickly could they potentially recover? And obviously, we talk to many different industries all the time, and all that information is feeding into our models again. And that is why everything you see here on this page is becoming basically smarter every day. And this is the backbone for all the projections you will see. When we move to the next page, on the next slide, you see that in many ways, it has been an extremely difficult trade-off for many governments to, on the one hand side, managing this flattening of the infection curve, while at the same time, they also had to flatten the recession curve or the unemployment curve. And I think governments have taken very different strategies globally. They have been very differently successful in their approaches to deal with that. But ultimately, it has been a very, very unprecedented and difficult question to deal with. And that will continue to keep us busy for quite some time going forward. When we move to the next page, what is the current status, and how do pessimists maybe look at this, and how do optimists look at this situation? So on the one hand side, the pessimist would say it's still growing. Infections are increasing in parts of the world. They are increasing substantially. We don't have seen any guarantee that there is a vaccine coming and will be available, and it will help many people. The consumer sentiment in many markets, and this is interesting, no matter if there were formal lockdowns and restrictions or if there were less formal restrictions, the sentiment is low and remains to a certain extent lower, given the high uncertainty in the market. Pessimists would argue we may face a larger second wave that will force us to go into broader lockdowns again. And this could be even worse than the previous one. So this is what when you talk to pessimists, you would hear as arguments. On the other hand, there are also some positive signs. And what the optimists would say, that many of the measures we've taken around social distancing have been effective. Yes, there are still a growing number of infections, but particularly the number around death tolls is decreasing. Testing capacity has increased. Many countries have managed to somehow get a handle and controlling it. There are certain progresses on the medical front. So there are also good arguments on that side. However, as this is unprecedented, we don't know in which direction this is all going, and whether for the foreseeable future we should better listen to the pessimists or optimists, or whether we need a more realistic view in between. On the next page, what we have done is to translate this into economic scenarios. The dotted line is the assumed infection curve, and the red and gray areas is the economic impact. You see that I think the most likely scenario is a prolonged U-shaped scenario with a deep impact in 2020 that is driven by a lockdown period of around 2 to 3 months. Initially, everybody was hoping for a V-shaped scenario with a quick recovery, maybe overshooting GDP levels in the recovery, but then quickly going back to normal. This is still very much the belief, particularly in the US, that we are in a V-shaped scenario. I think most other parts of the world do agree that by and large we are at the moment in a U-shaped scenario where it takes some time also in 2021, 2022 to recover. And there's still concern and a few voices, but an increasing number of voices that believe we could end up in an L-shaped scenario overall for the total economy, which means that for a number of years, we will not reach the pre-crisis level, at least on an overarching GDP perspective. What that means on the next page for some of the key Asian economies is reflected here. We have, as Ruud was saying, it's a market consensus model. So we are feeding our models with projections and translate them into our scenarios from various different sources. A couple of examples you see on the right-hand side. But when you look, for example, at some of the geographies, and in the middle of this table, in the U scenario, which we believe at the moment is the most likely scenario by most of the market participants, you see that we have a substantial contraction of GDP, both in, let's say, developed Asian markets as well as in developing Asian markets, reaching from minus 5.4 in Japan on the lower end, or minus 4.8 in Hong Kong, to around 0 in mainland China, also negative in South Korea. We are rebounding in 2021, but there's a lot of uncertainty, particularly around this rebound in 2021, softer than in 2022, but we may not have reached the pre-crisis levels so quickly. This is the current view. The good news is basically we had to revise our projections in line with the market since end of February 5 times already, yeah, but we are seeing some form of a bottom that has reached. So the speed of further decreasing the projections downwards has slowed down, and there seems to be some stabilization, which is actually a positive sign, but not sure how reliable this is. When we move into autumn, it will tell us how it's really, how sustainable that is. Moving on to slide 6, you see what our classification and also in the discussions we had with many different industries is around the industry impact. I think everybody has a very good understanding by now how his business, individual business, is impacted. When you talk to a chemicals company, they know exactly how the chemical industry is impacted. But it's very important to understand how are your key customer industries are impacted, how are your key suppliers, for example, impacted also financially. Can you still sleep well knowing that some of your suppliers may slide into financial difficulties, and what happens then? But you see that there are only a few relative winners, yeah, potentially or presumably here in food distribution, telecoms, and things like that. But you have a lot of industries that are really severely impacted. Yeah? Passenger transportation, large parts of the services industries, consumer goods retailing, automotive suppliers, entertainment. Yeah. So these are industries that are severely hit. And then they are not all hit in the same way, but they will also have different scenarios itself. When we talk about V-shape, U-shape, L-shape, W-shape, and so on, we have to acknowledge that this is maybe true for the overall economy, but individual industries can recover quicker. So we clearly see industries that are in a V-shaped scenario, while some others, like potentially airlines, may be stuck for a long time in an L-shaped scenario. On the next page, and this is a very interesting page for global companies that operate in many different markets, we have put basically our 16 industries across a number of regions and countries: developed Asia, developing Asia, Middle East, Europe, and the Americas. And you see that the color coding reflects the impact on gross value add, so the contribution of the individual industry to the overall GDP, that particularly in, let's say, the developed Asian markets, in Europe, and particularly in the US, a large number of industries is severely affected, while in certain other areas, given the economic growth of the development character of some of the markets, there is still substantial growth to be achieved in those industries. So a very diverse picture across the globe, also in line with the projections we've seen earlier. On page 8, the next page, you see that basically what I mentioned earlier, on the one hand side, the downward trend of the economic projections has somehow started to slow down and stabilize, while on the bottom left-hand side, you see that the business sentiment, when we talk to executives in different industries, has started to somehow shift from initially a V-shaped scenario to this prolonged U-shaped. But since June, mid of June or so, we have also an increasing number of people who are afraid we may end up in this L-shaped scenario. I spare all the details on the right-hand side because I'm sure we have a much more meaningful discussions around some of those points with the panelists in a second. There's obviously on the next slide, we looked into one of the key developments that is also particularly interesting for many of the Asian economies around global supply chain and how the global supply chains are impacted. There has been a lot of discussion also pre-COVID on how those global supply chains might evolve. There's clearly everything related to the dependencies on the Chinese market that one needs to look closely into. And I think we don't have enough time now to go into all the details here, but what is clear that COVID-19 may become another accelerator of a trend that has been perceived already before the crisis, that there was kind of a move away from the increasing globalization trend of supply chain back to a more regional or local model. At least for those who can afford it, yeah? And not for everyone. Let me come now to the just teeing up the discussion on with two deep dives, automotive and the financial services sector. So on the next page, just briefly on how do we see the situation in the automotive world. I think in general, the picture has become slightly better over the past few weeks, particularly with sales in China showing more resilience than we may have initially expected. Europe is still difficult. You see also some of the projections we have in terms of global sales volumes under different assumptions. Base case would have been 70 billion of sales volume cars for 2020, and in the different scenarios going substantially down in the worst case scenario for the car industry of around 57 million or so, which is a fairly substantial hit to an industry that has already gone through quite some challenges even before Corona. But we'll pick this up in a second, and then maybe finally on the financial sector, as you see on the next slide, the crisis is traveling from a healthcare crisis to the real economy, and then subsequently to the financial sector, where it is now partially arriving now, but we'll see more impacts in 2021. In 2022, potentially later. I'm sure Jens can elaborate much better on this going forward, but we'll see that financial institutions will face some income squeeze. They will see problems on the capital requirements. So risk-weighted assets will increase for certain risks given the rating migrations of the underlying corporate risks and asset finance risk. But we'll also see increase in provisioning and actual impairments. And there will be further tightening again after regulators have been very quick in providing some headroom and giving some freedom on the regulatory side. This will go back, and banks will be challenged to provide also the financing they need to provide in order to finance the recovery of the economies, particularly in 2021, where we are all expecting this substantial rebound. So this is just a quick introduction into the topic, giving you the broader overview. And with that, I'm happy to hand over back to Ruud and the fellow panelists to go into the discussion. Thank you very much.
Okay, thank you so much, Philip. We're ladies and gentlemen, we're already getting some questions in. Again, please use the chat function to submit your questions. We'll kick off the dialogue with the panelists. Martin, if I may start with you, what is your first reaction to the report, and was there anything which actually surprised you?
So thank you very much, Philip. Thanks, Ruud, as well. No surprising results for us at Bosch. Very good report. And the findings are pretty much in line with our view as it being a long U-shape. So both the impact on the automotive markets as well as possible recovery paths. And definitely we're in an unprecedented global GDP decline, which is far greater than what we saw in 2009. So specifically for the automotive industry, I think heavily affected by the lockdowns, which impacted obviously the demand on one side and disrupted the local supply chains. So we agree also that for 2020, the 25% reduction, so about 70 million vehicles. Now, what we have to bear in mind here is that in 2017, there was almost 100 million vehicles that were produced. So most of the automotive supply companies have built their capacity around this 100 million. So therefore, we're definitely seeing that there'll be more structural adjustments in the automotive industry moving forward, and there's absolutely no way around that. And Philip also referred to the fact that the automotive industry pre-COVID was in one of its biggest transformations ever. So when it comes to recovery, we expect a global production volume of around 88 million vehicles by 2023, which obviously is still below the COVID levels of 2019. So next year, how do we predict it? We hope that it will grow by 16%, but this obviously then assumes that there's no second wave of infections and that we don't get the renewed lockdowns. In China, Philip mentioned also about China, we see definitely a return of customer confidence, very, very bullish. April figures also reflected improved sales figures. And for an example, in May, the vehicle sales in China was up by 11% than previous years, whereas they were down 30 to 60% of that month in US, EU, and Japan. Yeah. Coming closer to, if just finish off with ASEAN, the situation is also very challenging. We see April vehicle sales has declined by 80%. And May is also down to close 70%. The whole year, we expect it to probably be down between 25 and 30% in this region.
Right, right. So that's significant, Martin. In all honesty, and probably I'm thinking just too simply, in a too simplistic way, but I was always thinking, and perhaps the Chinese trend confirms that actually. I thought when I first saw the Philips data around the automotive industry, I was surprised, because actually I would expect that the automotive industry would come out strong, in particular soon after the pandemic, because people want to use their own transportation more than going with public transportation purely out of for safety reasons. But maybe I'm oversimplifying the situation.
I think it's still early days, Ruud. I think it is a case that the world is reacting to social distancing norms, and that certainly the demand for mobility solutions like the ride hailers, the Ubers, the Grabs, car sharing and public transportation is one of the things that will decline as the fear of catching the virus through close proximity. So it could be an increase in private cars or motorcycles, or even, you know, in cities like in Singapore, people walking or cycling. But I think it's early days to really see what that shift in the customer preferences are for mobility at the moment.
Right. Sorry. Thank you, Martin. Johan, any first reaction from your side, from as being part of a true engineering company, in addition to what Martin said? Any reflection?
Well, firstly, excellent report and most helpful, and I think a great framework to think about how this all develops. Firstly, on a medical piece, then the economy, and then even societal. And just as I was looking through this, just hit by just how tough the situation is. I mean, we are facing really, truly unprecedented times. And that made me think about just that our most valuable asset in the company is truly our people. You know, it is, the resilience of people, the good attitudes with which they've come at this gave me a lot of hope, you know, and was something that was quite amazing to see how people have come through this so far. And finding ways, you know, with amazing ingenuity and creativity to stay in touch with customers and make things happen. And interestingly, we've been connecting with our customers in different ways, and we've got this global customer connect process, listening to some of our global customers, the most senior staff, and just how they're responding. And also wow, I am blown away by just the human ingenuity and the resilience of people to find a new way, you know, so that's very interesting. Yeah. In terms of the report, I would say agree with almost everything that I see there. Some of the segments, we look into the sub-segments behind, for example, energy, where there's surprisingly renewables continuing to grow. We see even in the midst of this crisis, continuous investments, but of course, conventional power, oil and gas, very, very negative. So on balance, we agree with our outcome.
Yeah.
And I think the one other one that puzzled me a little bit, which would be interesting to just find out what drove that, was the view on Indonesia. Because if you look at those different countries on that slide with the industry segments, and then Indonesia, it's basically forecasted to be as bad as Italy. And I thought there's very different dynamics there. So that surprised me.
Right. I don't know, Philip, if you have a view on the Indonesian results at this moment. You're on mute, by the way.
Yeah, not a particularly detailed one. I think it's driven by a, let's say, market consensus model. So we look at the general projections for Indonesia, but I think your perception, Johan, is right, that it looks a bit awkward at first sight. I mean, I don't want to excuse myself based on the methodology that we're using third-party sources and translate them into the overall impact, which is a cheap excuse for that. But I'm not that much of an expert for Indonesia in particular. I think in general, you see, and that the when you look at the absolute numbers, the impact is for let's say developing Asia is still a positive picture. So we may need to look into recalibration of certain individual economies indeed. So I spotted that as well, yeah. But I can't tell you from my own expertise what is driving that other than the methodological aspect of that. But it's indeed a good spot overall.
Yeah. No, of course, Philip, I appreciate that. Johan, there are two things, right? Which I totally agree with you that the agility and the innovation which has been going on since the outbreak of this pandemic is impressive. And if I may talk about our experiences as a traditional audit firm, you know, where because we are very, very prudent with anything which we launch in the market, the speed to market of contract tracing apps we developed, et cetera, has been amazing. And I've seen many examples in the marketplace, which is fantastic. And I truly hope that you know, suddenly bureaucracy doesn't seem to exist anymore. And let's hope that it stays like that. With Indonesia, Johan, I agree. I agree with you. And Indonesia is a hugely interesting place. Already before the pandemic, what I've seen in particular in the fintech sector is a huge amount of startups and innovative companies by young people who look at basically alternative ways to get a job. They don't have access to jobs in the traditional ways, and you see a huge influx of in particular Chinese and private equity in these startups in Indonesia. So a hugely exciting world. We're getting a lot of questions in, and one of them addresses the banking sector. So Jens, if you permit me, the following question is for you, which relates to questions which are coming in. If we focus on banking, right? What are if you compare the current situation of the sector, of the banking sector, with the financial crisis of 2008, what are your observations? Are there differences? Is it basically the same? Is there anything which now stands out compared to the financial crisis? What are your observations, Jens?
Yeah, thank you very much, Ruud, and thank you very much, Philip, for the very good report. I think one of the very first things is very obvious, and I went through the financial crisis as a banker as well, but I was in the office. You know,
yeah,
and I'm now at home in the 18th week, you know, going through this crisis, and this is certainly a different feeling, even though it looks like I'm in the office, but I'm at home. You know, I try to make some nice background, some real background here. No, but I mean, unlike the financial crisis, the coronavirus is having only an indirect impact on the finance industry. Today's crisis is clearly one of the real economy, and the financial crisis was even triggered, I would say, by banks and the banking industry. This time, I think, in particular, talking about the EU, that I think the EU banking system, and of course, to a certain extent, other banking systems have a much more stable structure today than it had then, especially if it comes to capitalization. And this is a little bit of a good news, I would say. In other words, banks are much better capitalized as compared to before the financial crisis. And that is obviously one of the lessons learned out of the financial crisis. And, you know, thanks to the regulatory authorities, we are at this point in time. As an example, the median tier 1 capital ratios in Europe have increased by a factor of 1.8 compared with pre-financial crisis times. And in addition, I think the equity quality of banks has also improved, for example, through the elimination of the so-called tier 3 capital. I don't want to go into too much details. Also, a series of capital buffers have been introduced, and new liquidity requirements have been adopted. So all in all, since the financial crisis, there was some good developments, And meanwhile, also initial steps have been taken to create more bail-in capital, and good progress has been made here. Nevertheless, and Philip, I do of course agree with you, it's not everything rosy and the banks are doing fine. There are still many weak points, and first and foremost, with respect obviously to the profit situation and the medium term, in the medium term, the asset quality of the banks. Yeah, a lot hinges on how quickly economies can return to business as usual, and there's a significant amount of uncertainty, as we all know. But as I said, it is in no way a repeat of the financial crisis. The actual effects of the banking landscape are likely to manifest themselves gradually over time, and I do agree with you, Philip, we will more see in 21, maybe even later, yet trends that have been around for some time already, such as, again, profitability pressure, a consolidation in the banking sector, increase in digitalization, etc., are likely to be accelerated by the coronavirus.
Yeah.
Thanks.
Yeah. Thank you, Jens. Martin, I think this is a good question also for you. Again, looking at the looking at the report, did we miss a topic or aspect when discussing the impact of the pandemic so far, in your view?
No, I think it was. I think it was very extensive in terms of the view that was given. I think the only bit maybe was about technology and the trends which are going to occur maybe in the future, which we discussed before. But I think also there's probably something in terms of the supply chain impact. Yeah. So if we look at you know, how that might come together. I mean, local for local is definitely one of the things that Bosch has been doing in our strategy, and that might then actually become more of a focus that the automotive takes into account. And I think there's also this trade war difference, or how you want to put it, between China and America. Mm-hmm. That also, I think, decoupling from China, reducing the dependency on China. I mean, we have very big production sites in China. We also have them then locally here in Southeast Asia. And we intend to keep basically that difference, but also look at, strategically wise, what that means in terms of decoupling. Southeast Asia for us remains a big marketplace where we want to invest more in, and we showed that just 2 weeks ago, where we announced a new plant that will be built in Penang for semiconductor and testing of sensors. And it shows that you know, that this neck of the woods is still a strong investment hub for Bosch and for the automotive.
Yeah. Thank you. Yes. So de-risking by perhaps moving or starting manufacturing in different countries, like Vietnam. We definitely have seen that happening. On the other hand, what we also see is that many players, they are in China because of the Chinese market. That's the reason why they are there. It is a part of the business is the manufacturing and the associated benefits for that. Of course, geopolitically, how things will play out, we will need to see. In particular, in the pharma and technology area, we'll see. We'll see how this will play out. Now, Johan, you addressed in the beginning already that of course businesses are impacted. How is the pandemic impacting your business in particular? Do you see any trends emerge that confirm or are different from the findings in the report?
So I would give you an internal view and an external view. So internally, a lot of things have changed, and there's been a significant impact. As I said, that I am amazed at how people have responded. You know, a lot of our business is industrial, putting in service complex robotic systems or motors and drives that's integrated into process plants. And overnight, this possibility of doing that remotely, I mean, shipping AV headsets to customers and then helping them put this in service without us being present on site has taken place. And this is now daily routine for us. So again, I'm thinking about just the permanent effect of the speed of digital adoption that has taken place. You know, things that we've been talking about for years that has technically been possible, that has suddenly become the de facto way of working, and is going to be for, I mean, until we can travel again around the region for, you know, quite a few months. And I really expect that to become standard practice and entrenched and resulting in permanent productivity gains into the future. In terms of impact, we absolutely track what's happening with our customers very carefully. You know, we, like Bosch, is quite localized. We have a variety of manufacturing plants around the world, and we can source from different places. So we will maintain that, and we definitely see that as an advantage at the moment. We also, just by the nature of our work, have to have local service people. So in every country in ASEAN and around the world, we have local people that can service equipment and installed base, which is a great advantage. In terms of impact on customers, it varies dramatically and across the different countries as well. And we talked about automotive, and I just saw a report from the International Energy Agency that said that EV sales have not been impacted nearly as much as normal passenger car sales. In fact, they're saying year to date it's flat compared to last year, which is obviously slower than the growth that we have been seeing. And they're predicting some growth this year, even in EV sales. And we see that in the sale of charging infrastructure. So countries continuing right through to roll out charging infrastructure for EV. And some of the other green kind of driven initiatives, I saw the report mentioned, you know, an increased or a consistent view of ESG factors, which is, to me, great news. I think that is good to hear that, and really encouraging that even through this, people are really caring about environment, society, and governance. But other segments that has been shown in the telecoms, there's clear investments going. Indonesia, there's data center investments that are accelerating, which are all good opportunities for growth. But then, yeah, we have discussed on the ones that are negatively impacted as well. That's clear.
Yeah. Thank you, Jan. Thank you. Very, very interesting. Jens, turning back to the banking sector, what are the main challenges the banks are facing, and is there a difference, or are there differences between banks in Asia and Europe?
Yeah, thanks, Ruud. Perhaps, you know, well, obviously there's a whole bundle of challenges. And let me, you know, mention a few applying basically to all banks around the globe. You know, when we went into this crisis, market prices and capital markets volatility was a big issue. Luckily, that has come down a bit. Operational restrictions. Think of banking, retail banking, closure of banks and bank branches in countries. Then, of course, higher counterparty risks and loan defaults, greater liquidity requirements, loss of income, pressure on equity ratios, increasing refinancing costs. That is certainly, the list might be longer, but I think the biggest challenge, though, in my view, is of course the asset quality deterioration over the time. And of course, I think that there are differences in the banking sector. There are regional differences. If you look at the US, Europe, and Asia, partially with different regulatory requirements. There are differences in types of banks. You know, if you think of global banks and more regional banks, and last but not least, and the business models and size of banks certainly differ, and the crisis will have a different impact, or to a different extent. In more general terms, I would say obviously banks with high exposures in sectors hardest hit by the virus will be impacted relatively more significant, to a relatively more significant extent. And this, I think, also applies to banks in countries where the local economy is expected to experience a much or relatively sharp GDP decline. Yeah? This is a function, and the banks are directly impacted as well. As I said, European banks are in general much more resilient, I would say, than before the financial crisis, and but we will feel the negative impacts in form of rising credit risks, even if stimulus packages and monetary policies or relief measures do have an initial mitigating fact, but they just bought us some time, I would say. Yeah? And as for banks in Asia, I think we also need to differentiate as well. Banks in those countries who came out of the sort of crisis or the lockdowns faster, let's say, yeah, look at China, South Korea, I would say, and even Vietnam, will certainly suffer less, in my view, than in those countries where the pandemic has still not reached the top yet. So it's not that easy. There's no general answer. There's different, I mean, there are some big bundle of challenges we all face, but obviously there's differences, as I said, in the area of the world where you are in. That's the unique thing with this crisis, I would say.
Okay. Thank you, Jens. That very, very interesting, and it's a nice bridge to another question. And Martin, I take the liberty to ask that question to you. What is the most important lesson you have learned during this pandemic so far?
Thank you, Ruud. What most important lesson I think definitely is that business has to go on, and obviously remotely, and that Bosch has been very effective in this. The digital tools, or our move to digitalization, has shown that we got the tools up and running, and everything has worked great. I think the other one is, I have to say, is just like Johan mentioned, it's the absolute innovation power of the associates, and how quickly they managed to turn this crisis into an opportunity. Just give you a couple of examples. In 8 weeks, we adjusted our automotive production assembly lines, and we turned them basically into mask production, and we're producing 600,000 masks a day now to protect our employees. And Bosch uses, on average, about 3.8 million masks a week. So a great innovation opportunity. Also, our healthcare division of Bosch, we developed a COVID-19 tester for the pandemic, and this is a fully automated tester that gives you a solution, or it gives you a result within 45 minutes. And again, we're using this within each of our 40 Bosch production locations worldwide. We're also then working with Singapore authorities to get it into Singapore, and also within the World Health Organization. So whilst the automotive business is proving to be very challenging at the moment, we're happy that Bosch has a very good, diverse portfolio, so that we can keep innovating and finding new solutions. And another one is with our building technologies. They've devised a solution which does a count basically of people moving into shops or offices, and quickly displays how many people are in there, and a hand saying no going any further. So it's great opportunity, but all done through the innovation power of the associates.
Yes, yes. Thank you, Martin. Very, very interesting observations. Now, flipping back to Johan, right? Martin earlier said that Bosch is still very committed, testimony by events last week, to the ASEAN region. My question to you is, will the role of ASEAN in your company change due to the pandemic?
It's going to continue to be a very important region for us. We definitely expect that as supply chains will adjust to some extent, that ASEAN will be a net beneficiary of those shifts. So that trend that we've seen of FDI into factories and manufacturing capacity in Vietnam, Thailand, some in Malaysia, we expect that to continue, and we follow our customers. So we will continue to build up strength here. Digital adoption is clearly, it is a region that's fairly quick to adopt new technology, and I see that continue. So and that's one of the clear trends that has emerged for us, is an acceleration of drive towards autonomous, so automating where it's possible and digitalizing where it's possible. Some of the big process industries in Indonesia, it's 2 days to travel there anyway, including a boat ride on a river to get to some of the, let's say, pulp and paper factories and palm oil factories. So we needed to get some more efficient solutions.
Right.
And the best solution was definitely not to get in a plane or drive a car for thousands of miles.
Yeah.
So it continued to be very important for us.
Yes, yes. And Jens, what about the bank?
Yeah, of course, we also follow our customers, and Johan and Martin. We try. There's absolutely more focus on ASEAN. As an example, we just opened a new office last year in Jakarta. We have done a lot of business in Vietnam, in the wind sector. So clearly, we will go further in ASEAN as well. It's a very important region for us.
Yeah. Jens, I stay with you. This also relates to one of the questions from the participants, right? Let's focus on the future. What are the future trends and new opportunities for banking post-COVID, and are there maybe specific sectors where the bank should focus on?
A clear answer in our industry, like in many others as well, is digitalization. I think we are all already seeing across Europe and Asia, a switch to digital banking. Younger people in particular are contemplating switching a contactless payment, and I'm afraid branch closures over the coronavirus period are likely to accelerate the trend towards a digital and mobile banking. Banks do certainly not score highly on customer satisfaction in this period, or who do not score highly will lose ground. But also, interestingly, I think Philip mentioned, or somebody mentioned, the fintech investors. I think there will be a slightly different trend. Fintech investors are likely to hold on more tightly to their money than they did before. That is my impression. Younger and not yet established companies, in particular, may have a tougher time tapping into fresh money. The good old local bank won't necessarily be the one to suffer, in all honesty. But clearly, I give you Just maybe a few numbers. 72% what was the rise in the use of finance apps in Europe due to the lockdown measures.
Yeah.
That is a survey done by Diver Group Consultancy. 6 million, that's the number of adults in the UK that have downloaded their bank's app for the first time. That tells you a lot. That's 3,500. That's the estimated number of additional branches in Germany that will be closed by 2025 due to the coronavirus. That's according to Investors Marketing Consultancy in April. And last number, perhaps 10.5%. That is the annual growth rate of global cashless transactions, likely to increase significantly due to the virus, according to eMarketer.com. So these are clear trends. We are heading full speed into a very, very, very digitalized world. And if I may say so, for some of the banks, that I think was long overdue.
Right, right. Thank you very much. Thank you very much, Jens. Ladies and gentlemen, I'm conscious of time. And panelist Philip, Phil, I would like to use the occasion to ask two more questions from the participants, two quite interesting ones, and it's to all of you, and feel free to respond, preferably not everybody on the same time. So the first one is the ASEAN Secretariat worked from 2007 till 2012 on non-health sector pandemic preparedness planning, and in efforts obviously to develop business continuity plans. Unfortunately, that was discontinued after 2012. Now the question is, could governments have done a better job in having BCPs in place, and therefore whether or not they should put them in place now for future pandemics? Who would like to respond to that question?
It's a tricky one.
It's a tricky one.
So maybe I give it a start, and then it's difficult to formulate a general answer on that, obviously, but it reminds me of a situation we've experienced after the financial crisis, when bank executives were asking their risk managers, why has this not been captured in our risk models? They are so sophisticated and everything is included. And then the risk manager said, yeah, but we always said this is a once-in-a-lifetime event and this can't be captured in the models. It's just for the, let's say, normal environment that you can imagine and think about, while nobody was thinking about such a major once-in-a-lifetime event. And this is somehow similar to the pandemic situation. I think having something of that magnitude, that global scale in the plan is clearly something that many governments will need to revisit now. Yeah, they will need to update their plans. I'm not sure how many plans have things incorporated like meteoroid crashing on the earth and whatever can happen. Yeah, but we may need to have a more differentiated view on incidents with very, very low likelihood, but very massive impact. Yeah, and move away from focusing too much on things that happen frequently, but have a medium-sized impact. So for this kind of once-in-a-lifetime impact with such a magnitude, we will need to look in this. What I'm really happy about, and I think that was mentioned on the slides, is that that there was a bit of a concern that everything around climate might drop off the agenda given all the challenges we are facing now, and the entire topic of ESG might move from something that was something we feel we can afford in good times, but it may drop off the list quickly once we are in more difficult times. and this has not happened. Yeah, so I think everything around ESG, no matter to what industry you talk, yeah, no matter whether you talk to the real economy, to the financial economy, to investors, to banks, whatever, it remains an important topic, and I think this is the right mindset of the industry. And when you talk about governments, yeah, I think many governments have hopefully also learned their lessons on how to be better prepared, particularly also around the healthcare systems, no? What investments are appropriate and needed. But the challenge is, and this is something we haven't mentioned today, governments have done a great job in dealing with the crisis by and large, in putting in, let's say, stimulating the economy, stabilizing the situation. Some countries better, some countries worse, but without the financial stimulus and the support measures put in place, the situation would have been a lot worse for everyone. And that is for sure. And I think many of you mentioned that before. The only question is, how long can we sustain similar stimulus levels? Because this will not be done in August or September 2020, but we may need to look into 2021, with this, for many reasons, a very crucial year for us, no matter if you're in Asia, if you're in the US, or if you're in Europe. And the question is, how deep are governments' pockets around the globe to do this? And we already see a difference in those countries who can afford stimulus and those who can't. And this will be the challenge also on the one hand side. And the second point is, many countries have dealt with the crisis on an individual basis. The Germans have dealt with German problems, the Italian with Italian problems, the Chinese with Chinese problems, but we haven't really seen any larger supranational solutions. Now, some institutions are doing a bit more, but this is something where hopefully more global or at least regional coordination, helping those who may need more help from those who can afford to help more, will become crucial questions going forward.
Yeah, very, very interesting observations, Philip. Well, I couldn't agree more with let's say the fragmented situation. I mean, the only thing which seems to be global is the pandemic, but the way territories are dealing with it is not global at all. So I totally agree. Is any of the other panelists who would like to respond to this? Otherwise, I go towards the last question. I think I go towards the last question, which just came in, and which is about racing towards digitization. What does that mean for the traditional workforce? Did the crisis also accelerate the need to reskill the workforce? Who would like to react to that?
I can maybe start and just say that what we see at the moment is the worst kind of fears that people have had even before the pandemic of mass displacement of workforce is not really happening. It's more man working with machines and in a closer and more integrated way. And you know, so I mean, it obviously depends on sector by sector, but by and large, we definitely see, you know, that process of companies surviving and doing more and doing better, augmented by more and more computing, better information presented in smarter ways. So I think that's definitely going to be a trend, and something that's going to, it'll be, I mean, when you think about the shape of the recovery, I agree with you, but I think there will be some pieces that would never come back at the end of the U, but there will be others that have been, you know, come in its place, and that we're really seeing activated very quickly. And exactly what the balance of that would be, we would have to see in terms of employment.
Yeah. Thank you, Johan. Thank you. Ladies and gentlemen, we're coming to an end. On behalf of myself, I want to thank you for your active contributions, and of course the panelists and Philip for the introduction. Please allow me to hand it back to Chris.
Thank you, Ruud, and thank you, Martin, Johan, Jens, and Philip. That was a thrilling discussion there. I think we could have gone on for another half hour or so, and still at the end of it, reaching for our boxes of tissues, I think, because it's going to be a long haul ride coming out of this, and different sectors, I think, will come out faster than others. Thank you all again very, very much. People online, thank you for joining us and staying with us. We have another webinar tomorrow looking at the future of travel and tourism in ASEAN, where I rather suspect it won't be a cheery picture as well, but please join us for that one. Thank you all again, and wish you all a good evening. Thank you.
Thank you so much. Bye-bye, everybody.
Thank you. Bye-bye.
Bye.